Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news that after 15 months of trade war, the easy win is as elusive as ever. The US merchandise trade deficit was $72 billion in August, up slightly from July, but down slightly from a year ago. Exports fell on a year-on-year basis, but imports fell more. The big mover was imports of industrial supplies, which fell 16% year-on-year. But overall, the trade war doesn't seem to be fixing this deficit. The final US second quarter GDP data released overnight didn't change the earlier reported 2% rise, but it did throw some light on the downturn in business spending, which has been blamed on the 15-month trade war with China. The soft investment and sluggish profit growth raises doubts about future jobs growth and therefore the American consumer's ability to continue driving their economy. Pending home sales in August rose 1.6% over July and are now 2.5% higher than the same month a year ago. But the gain was less than markets were expecting, and the Trade Association now thinks 2019 will come in at less than just 1% over 2018. Flagging new home construction is holding them back, they say. The next Fed region to report factory activity is Kansas City, and their survey was soft in September. Tariffs were cited as a key reason. In Mexico, their central bank cut its benchmark policy rate by 25 basis points to 7.75%, the second successive cut. It comes after their inflation rate cools and their economic growth starts to waver. In China, their banking regulator is accusing banks of hiding profits by maintaining excess provisions. It said if it finds provisioning greater than 300% of non-performing loan balances, it will force those banks to distribute that excess as a dividend to shareholders. In Australia, the real estate industry is backing their government in an effort to roll back ASIC's prescriptive restrictions on accessing borrowers' financials, which they say is disqualifying house buyers unnecessarily. The US Treasury 10-year yield has slipped today to 1.69%, down 3 basis points from this time yesterday, and gold is up $3 to $1,507 an ounce. US oil prices are little changed today at just under $56.50 a barrel, and the Brent benchmark remains at $62.50 a barrel. And the Kiwi dollar has risen back somewhat this morning, back up to 63 US cents. On the cross rates were higher too at 93.3 Aussie cents, and against the euro we're up to 57.7 euro cents. That puts the trade weight index back up to 68.6 and its highest in more than a week. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.